When markets crash, most panic and sell. But the smart money? They're quietly buying more. Promoters, insiders with the best info, secretly increase their stake in winning stocks. Want to spot these hidden gems before the rebound? Let's break it down. In one of the recent interactions with investor community, maverick investor Ramdeo Agrawal said that promoters usually start increasing their stakes within 2 to 3 months of a downturn. And we're already seeing this happen. Recently, promoters have been buying more shares in some of the fundamentally strong companies which have corrected close to 30%. Stick around till the end, because that's where the real gold is. I'll be revealing the exclusive list of stocks where promoters are silently increasing their stake, and trust me, you don't want to miss it. Does promoters buying their own stock during a crash really create wealth? Let's test the hypothesis with real data from the COVID-19 crash in 2020. When panic gripped the markets, smart promoters doubled down on their own companies, and the results were astonishing. Jeff Bezos bought $3.4 billion worth of shares when Amazon crashed to $1,600. A year later, it soared to $3,700. Elon Musk increased his stake in Tesla through stock options. Tesla plummeted to $72, but skyrocketed past $900 in a year. Warren Buffett repurchased 5% of Berkshire's stock for $24 billion at $161. It later surged past $350. But it wasn't just global billionaires. We have some great examples from India too. Radhakishan Damani increased stake in Avenue Supermarkets, D-Mart, from 75.51% to 75.66% at 1,500 Indian rupees. The stock exploded to 5,800 Indian rupees. Tata Sons grew its stake in TCS from 72.05% to 72.19% before TCS rocketed to 4,000 Indian rupees. Deepak Parekh, his HDFC stake rose from 18.16% to 19.16% at 1,500 Indian rupees. The stock doubled in just a year. Bajaj family increased stake holdings in Bajaj Finance from 56.13% to 56.24% at 1,780 Indian rupees. Later, it touched 8,000 Indian rupees plus. This overwhelming evidence proves one thing: when promoters put their own skin in the game, they do it for a reason. Following their moves isn't just smart, it's a time-tested strategy for building wealth. Now, you might be thinking, that's great. But where do I even start finding these stocks? Well, back in the day, this kind of information was a privilege, available only to high net worth investors, stockbrokers, insiders, and mutual fund houses. They got the first-hand data, while retail investors were left guessing. But thanks to technology, the game has changed. Today, even retail investors can access this valuable data through powerful screening tools for just a nominal fee. Some of the best screeners available today include Screener.in, TickerTape, TradeBrain Screener, Investing.com, Trendline Screener, StockEdge, Markets Mojo. Here are my latest findings from a top-rated stock screener. I ran a powerful screener to uncover potential winning stocks. Here's what I found. I filtered for companies with a market cap over 1,000 Indian rupees, Crores, zero promoter pledging, and stocks that have corrected more than 30%, but with rock-solid fundamentals. RoCE greater than or equal to 15%. Net profit margin greater than 10%. Return on equity greater than 20%. 5-year EPS growth greater than 15%. Low debt, debt-to-equity ratio less than 0.5. This narrowed down the entire stock universe to 34 fundamentally strong stocks. But then, I applied one final filter. Which of these stocks have seen promoters quietly increasing their stake? And guess what? I found 4 hidden gems. Godawari Power and Ipat Limited, Shakti Pumps, India, Limited, RPG Life Sciences Limited, Bombay Dyeing and MFG Co Limited. The full list of fundamentally strong stocks is in the description, go check it out. And tell me, which of these stocks looks the most promising to you? Let's discuss in the comments.